Why is it so important to understand market structure? Well, not because we want to get the idea what the direction of the market is that is given, but because we use different rules for different type of market structure. In front of us, we have a trading range structure. When we analyze the chart, we can see a little bit of a bullish bias, we can see a little bit of a bearish bias, but overall, there is no clear, strong uptrend or downtrend. And every single time you're unsure what the structure is because it is easy to identify the trend. It is like it will smack you in the face. So when you're in doubt, you're probably in some form of a trading range, and that means you're going to be looking for specific setups and drawing your channels in a specific way. If you take a look at the right side of the chart, we can see a clear downtrend working lower, and it is hard to confuse this with any other different structure. This is a clear downtrend. Most of the times, prices stay below exponential moving average, and we use different rules to draw our channels here and to look for high probability setups. So let's talk about how do we approach a trading range structure, and then how we're going to approach the trend structure. Because right from the very beginning, of course, I need to do my pre-market analysis. And since I'm a price action trader, I know that I'm going to be looking for my channels, because market is always in some form of a channel, and it is always working under some form of a pattern. Now, we have a small little trading range. We broke out of the trading range, and notice I'm drawing the shortened channel. Why? Because at this point on, the structure is very tight, and in trading ranges, I'm drawing my trend lines tighter. I'm not looking for wider patterns, I'm drawing them tight. But I can see that we have a break. We move to a new extreme. Now, it is important for me to draw these channels because I want to follow the trend line rule, which says after break of the channel, traders will create new extreme. But what I have a break new high, and I have multiple new pushes to new extreme, which is telling me that there's probably a larger pattern being in play. Notice how big this leg is. So what I'm going to do, I'm going to identify a wider pattern. I'm going to use first couple of swings at the bottom. I'm going to connect it like this, and this is nicely giving me information about the structure. So at this point on, I have bullish uptrend, and that means that the high probability setup is going to be a two-legged pullback at the key entry point, second entry long. Now, I know that I'm looking for second entry long because the trend is up, and right now the bullish bias is in play. So once I see new high right here, this is where I'm going to reset the count. I always reset the count from the highest high, and this high right here is the highest of all of these highs prior. So this is where I'm going to count for longs. I have bearish leg down, and right now I'm looking when I get a break above a bar's high. I have a first break above the series of these bars, so I have a first entry long above this bar right here, but this is just a first entry long, even though it is at the exponential moving average. And it is at the break of a trend line. First entry long is not a high probability setup. I need to see a two-legged pullback, second entry long. But notice what happened. First entry long fell. This is why we're not looking for first entry, and market continues pushing lower. So at this point on, I need to draw my shortened trend line as well. I'm not only drawing them for these trends, I'm drawing them for the corrections as well, because I want to know whether it is okay to sell. And here it got a little bit difficult because I have this channel working lower, and at the same time, I have this bigger channel working up. So we have a break of this downtrend, and we have a break of this uptrend. So which trend I'm going to focus more to get new extreme? I'm going to focus more on the larger pattern, because this was the first pattern and this is the bigger pattern. And in price action, the bigger pattern is taking precedence more often than not. And it was pretty easy to dissect the information because we strongly pushed above EMA, confirming the strong bullish momentum. Now I'm going to redraw the shortened channel as well, and we had a break, new extreme, and every single entry is far away from EMA, so I cannot take any long entry right here. I have a new low, first entry short, second entry short, which is going to be a trap most likely because the trend is up. So second entry short, everybody who's going to go short on a two-legged pullback is going to get trapped because the bias is bullish. Now at this point on, I see that prices created new high. That means, according to trendline rule, that I'm not looking for any longs at this point on. And notice what we have. New high, first entry long, second entry long, that trapped everybody. Even possibly could have made a quick scalp, but I'm definitely not looking to go long. If anything, I'm looking to go short because I just reached a new extreme and I know that it's time for correction or possible reversal. And since this is not a strong uptrend, it's looking quite range like. We have a move up, move down, move up. Notice how EMA is flattening, spiky moves up and down, up and down. This is not looking like a strong trend. This is a strong trend. You guys can see there are no big moves up and down through the EMA. Everything is basically for the most part below EMA. Every single time you barely get above EMA, you push lower. So this is a strong trend down. This is not a strong trend up. This is very weak uptrend that right now had a new high. So what I did, I identified the resistance, and that way I'm reminding myself that I'm not looking to go long. Now I see strong push below EMA, and I have a first entry long, pullback, second entry long failure, and I have new low, first entry short, pullback, second entry short. We have strong push below EMA indicating potential bearish momentum. With new high form, it is okay for me to expect a bearish momentum, and this is a high probability setup. Why? Because it is a variation of a two-legged pullback. Second entry short, because you have a new low right here, and you have a first trigger below this bar, pullback, tick higher, and a second trigger below this bar right here. So this is a second entry short, and a new high, first entry long, pullback, second entry long, failure. I'm not looking to go long because uptrend played out. So I'm going to market. I'm not too excited about this trade. Why? Because if I'm going to take a step back, we still traded up and we are quite high, and this is the low of the day, and notice the big gap in between. I want to see a proven trend in the opposite direction first. So even though this is not a bad entry, I think it is just a little bit too early, because I want to see proven downtrend, because we traded up the entire time basically from the beginning of the session. So I need to really be sure, but this is a second entry short and I felt second entry long, so definitely it makes sense. But notice what happened, the last push up, but still that doesn't change the fact that this is not a strong uptrend. We have a move down, move up, move down, move up. EMA is flat. This is a very trading range like structure, which means I'm not going to be drawing wider patterns. You may be tempted to draw and find channel, for example, like this. I'm just going to copy it, put it at the top. Notice how nicely it is fitting off the highs. Triple confirmation, it fits off the lows, and if you take a long here, you're going to get trapped. And this is the reason why identifying the structure is so crucial, because it will make a difference with the way how you view price action. Since this is a trading range like structure, I know that I'm sticking only to the short-term patterns and I'm not drawing these outlandishly wide channels. So for that reason, once we have a new high, I'm still not looking to go long. Once prices are pushing back below EMA, confirming this is looking like a trading range, at that point I even drew a support down here to really make me understand the structure. We have a new high, first entry long, pullback, second entry long, failure. But this felt second entry long is too far away from EMA. It moved too far down. You don't want to go short here, and prices kept pushing lower. And notice now it's making all sense. This is a truly trading range structure, because you basically came back all the way where the uptrend started. So I'm sticking to the short-term channels. I have a break, new extreme, following the trend line rule, telling me that I expect correction or possible reversal. And notice what we have. We have a new low, first entry short, pullback, second entry short. Now this was a very tempting trade, because there's a possibility to even draw a spike and a channel a little bit like this. But the way I draw my short-term uptrend, I have this channel in play. Now if you took this trade right here, I can definitely see why. And I'm going to mark it as aggressive entry, because it is such a great signal bar. We stay below EMA the entire time. It's the first test of the EMA second entry short, but I'm not drawing the trend line too tight, and yet I'm still inside of this channel. I would have to really make it, really cut the corners a lot, potentially draw it like this, so I have a tiny little break, new high. But it is very questionable, and when you're watching this live, it really looks like the uptrend is in place. So I can see if anyone took it, but I prefer to be a little bit safe here and really to have a clear break and new extreme. And notice what we have, additional move to a new low. So I have first leg down, pullback, second leg down, and notice here, we have first leg up, pullback, second leg up. Market likes to move in pairs of twos, and when you see a break and you have first leg to a new extreme, it is not uncommon to get a second leg to a new extreme. This is why we want to see a reversal pattern. We don't want to just pick bottom or top and try to predict major trend reversal. We want to see strong push below EMA or above and to get reversal pattern. So now that I have a break and new low, market is stalling here and is strongly pushing back above exponential moving average. So that means I'm going to redraw the short-term uptrend. I have a break and a new high telling me, according to trendline rule, that I expect correction or possible reversal. Strong push below EMA indicating to me that this is going to be a reversal, probably. Now at this point on, we have a lot of up and down, so I'm going to be really focusing on trading range structure. We have a new high, first entry long, pullback, second entry long. And once I was watching this, I was already preparing myself to take a failed second entry long. because this is a new high, uptrend played out, first entry long, second entry long failure. Notice we pushed below EMA, which is confirming the bearish momentum. Uptrend played out, and this is a great reversal pattern, and also new low formed, first entry short, pullback, second entry short. Notice two key entry points are holding, EMA and the trend line, and also notice the reason why we draw tight channels in trading ranges is this reason right here, because when I started trading, I used to draw my channels a little bit wider like this, but with experience, you will identify that this is not the way prices work in trading ranges. Look at the beautiful second entry long. And this is why this is such a great trap, because if you can make a great case for the opposite side to take the entry, you know that it's going to be a great trap. And I guarantee you, everybody is looking on this uptrend, on this big bullish bar. It just ticks a couple ticks higher and it reverses down, trapping everybody, and this resulted into such a big move down. So this is why in trading ranges you stick to the short-term patterns. Eventually there may be a one channel that's going to be wider, but on the balance of probabilities, you're better off just sticking to the tight channels and expecting reversal. This is basically what I expect the most. I don't really expect any trend to start in any time soon. When I see indecisive structure like this, ladder up and down, I just expect break new high reversal, break new low reversal. I just keep expecting reversals because that's most of the time how price action will work. Because in trading ranges, a lot of losing trades happen because traders enter too late. They want to see confirmation, but by the time you get confirmed trend, it's already way too late. And in trading ranges, the extremes are going to come into play and the market is going to reverse. So this is a second entry short, fell second entry long, great high probability setup. Now we have a new low, first entry short, second entry short. Market is stalling a little bit sideways. Now, since this downtrend doesn't have a new low and we pushed back below EMA, I redrew this downtrend, and at this point on, I expect still a little bit of a bearish momentum. We had a new low formed, first entry short, pullback, second entry short. I took the second entry short, I barely got out, made the scalp before market created new low and reversed on me. I was still respecting this downtrend, expecting for prices to create new low, barely got out, but eventually market continued pushing higher. Now I can see that there's a little bit of a bullish imbalance because we have a series of higher lows, but notice the highs are static, which is telling you, and this is important, that there is no uptrend. Because once again, I can draw a wider pattern like this, and even though I'm repeating myself constantly with the wide channels, it is important because there's a tendency for us as traders to look for these patterns because the lows are getting so confirmed. You cannot deny how well this channel is fitting, and it makes you believe that this channel is valid, and this is completely natural, and this is the way price action lures us. And I used to draw these channels all the time, but I used to get trapped every single time. So I'm trying to share my experience that you don't have to draw the channels this way, and you can shorten the learning curve a little bit. And once again, once I'm watching static highs, I see that this is mainly a trading range structure. We have a failed breakout. However, I'm not really looking to fade the breakout just yet because of the series of bullish lows. I want to see proven push below EMA and reversal pattern. And we have new high formed, first entry long, pullback, second entry long failure. This is my second trade for the day. A lot of traders took it, and notice the strong bearish momentum. This is a definition of a trap and what it did, because this trap, a lot of longs buying here and everybody was forced to exit, and this resulted in such a strong bearish momentum. So this is what traps are supposed to do. If you see a trap, you kind of want to envision a good reason for the opposite side to take the entry. If there is a good reason for the opposite side to take the entry and you're already expecting the trap because you're reading the context correctly, that's going to be really a high probability setup. So we already have a bunch of failed second entry longs. You guys can see, you can study the reversal pattern. Now market kept pushing lower. We had overshoot of the channel. That means we expect correction or straight up reversal. Now for that reason, because I have such a massive overshoot and I expect break of a channel or possibly reversal, and we're bouncing off the lows of this range, I'm drawing my channel wider. I'm not drawing it tight like this. And this is why it would have helped you to not get trapped on a second entry short here or potentially another short here. Because overshoot can create a break on the other side. For that reason, I'm drawing the wider pattern. You guys can see it eventually pushed lower, but there is no way for us to take any short here. You just have to let this correction play out. You guys can see we probably even have something close to being a measured overshoot, I would assume. Yeah, it looks like the overshoot a lot of times is measured as well. But at this point on, what you have to do is you just have to wait for a lower high. There's no other way to do it because you don't want to go short here. So once EMA keeps holding and this downtrend needs to get new low. You cannot forget that. We traded down, so we expect new low according to the trendline rule. Strong push below EMA is confirming the bearish bias, and then if you get a lower high at the EMA, this is a great confirmation setup. But lower high has a bad signal bar, can't really go short here, and unfortunately there is no way to enter. The market bottom fell off, and at this point you're bouncing at the low of the day, so you have no idea that this is going to be a strong downtrend. You're playing this still as a part of a trading range, even though you can see that we consistently keep pushing lower. But once we keep pushing so far down below the low of the day key level, something's starting to happen. We can see that from the very failed breakout, notice how prices kept working below exponential moving average. So once you're already all the way down here, this is no longer a trading range structure. This is no longer up and down, up and down, up and down. Notice how EMA is pointing down. Notice how this downtrend has 2 touches here, 3rd, 4th. This is a proven downtrend. At this point on, the structure is starting to look like bearish downtrend, which means I can now look for wider patterns. It's okay for me to look for wider patterns when the market keeps consistently pushing lower. I cannot look for wider patterns up here. I can, however, look for wider patterns down here. So once the channel is working lower, the price action rules are getting easier, and the overall bias is easier for us to read, and it is easier for us to identify high probability setups, because high probability setup is just going to be a 2-legged pullback at the key entry point or the failed second entry long. So since we have a downtrend working lower, we have a first break of this downtrend, we have a new low form, and we have a first entry short, pullback, second entry short. This is the first leg up, pullback, second leg up, 2-legged pullback, big bearish bar, second entry short, high probability setup. And I was watching this, I didn't take this entry because I had my channel slightly different. How did I draw my channel? I had my channel like this off of these highs, and I had a little bit of an overshoot. So I didn't want to go short just yet, but looking back, with such a big bearish bar and such a clear 2-legged pullback, it is really tempting to take this entry. And if you took it, I can definitely see why. And this was the proper channel, because this is where really the massive downtrend started. Right here, it was still part of a trading range. Now we created a move down, but prices pushed above EMA and we kept working sideways. So I need to let this correction play out. I cannot force it. I need to see a push below EMA. You would expect to get lower high here, but there was additional push up. And notice what happened. If I'm just going to draw it slightly lower, yeah, the low of the day is still working. Notice prices came back and tested the breakout area and pushed back below EMA, indicating that the downtrend is resuming. So always draw these important key levels. Market kept pushing lower, and we had a lower high entry. Now in this instance, the failed second entry long really would have been better, but notice you have a first signal bar for the lower high, and then you have another signal bar for a lower high. So you kind of have small little 2 lower highs, if that makes sense. So this is definitely a decent entry to take. I would prefer a failed second entry long, but with such a great bearish bar right at the EMA and kind of double bar, decent entry to take, because at this point on, the downtrend is strong and bias is clearly bearish. So this downtrend right now formed a new extreme, and you guys can see how these channels are working. They are there. You have to keep drawing the short-term corrections as well, so you know when it is okay to sell. You have a break new low. At this point on, we are paying attention to what the EMA is going to do, because there can be correction phase or reversal, break new high, and we are pushing back below EMA. Now, when you look at a structure like this, this is still looking quite bearish, but we are in a correction phase, so I don't want to go short just yet. I want to see really clear proven short. At the same time, I definitely cannot go long. I really want to see a proven trend in the opposite direction if I'm about to take longs after such a massive move down. And there we have new high, first attempt to go long, pullback, second attempt to go long. But we're not looking to go long, they will be against the trend. And now we have a failed second entry long, again, decent bullish bar, and it ticked higher, reversed down, a great bearish bar. Is a failed second entry long. The bias is still bearish, we're below EMA, decent enough scalp. Now then we have second entry short, but it's a little bit too flat. EMA is getting too flat, too sideways. It's time to get a little bit stacked. No clear entry right here, and this would help you to identify a potential wider pattern. At this point on, it is okay for us to look for wider downtrend because it is a trend structure. and there can be a wider pattern developing. And notice how it's nicely fitting. Prices form a breakout pullback. We broke below the support, came back, tested it, and a big bearish bar. EMA keeps holding prices. The resistance now is holding. Decent entry, but it's just a first entry. At this point on, you're getting the information that the downtrend is strong, because after new low, we came into a trading range, and the fact that prices didn't even manage to move up from the trading range and we pushed back lower, basically resume the overall trend, is really telling you that the downtrend is strong. And once the trend is this strong, we can pretty much start betting the rules just a little bit. You no longer have to take perfect entries because the downtrend is going to be strong. You definitely don't want to keep reversing the market. It is also common. A lot of traders think that market is going to reverse any minute. You move too far down, it's too overdone, but no, market just keeps going lower and lower. This is pretty common. But this is just a first entry, so I'm not going to mark it, but definitely a tempting entry. All of these entries are first entries or far away from EMA. Then we have new low, first entry short pullback, second entry short at 2 key entry points. I like this entry. This is pretty typical entry in a strong downtrend. You need a little bit of experience, even though you have a short and uptrend in play. But first entry short, second entry short, 2 key entry points. That's a big bearish bar that managed to break the trend line. I like taking chances here. It worked, quick, easy scalp, and market eventually reversed higher. Now, this was quite concerning. Once this second entry short didn't even produce lower high, and there was such a big bullish momentum push above EMA, something is telling you that there's something happening, a little bit more of a bullish momentum. But one trader took this visual large 2-legged pullback, and he got burned here. After I saw such a big bullish momentum, I didn't really even think about going short, because something told me that we have a smaller double bottom. We're pushing higher, and we didn't manage to push back below EMA. We're kind of in the middle, but I can definitely see why trader took it, because it looks like first entry long pullback, second entry long, so definitely a decent entry to take a chance on. Even the uptrend has a breaking new high, so if you took this trade right here, I can definitely see why, and definitely nothing wrong with this trade. You took a chance on one of the better entries for sure. Pushed lower, no setup, pushed higher, first entry short, second entry short, double top, first break of the downtrend, you expect new low. This is a second entry short, big bearish bar, new low form, first entry short, second entry short, and prices eventually did pull back to the key entry point. And since this is the lowest low, this is where I reset the count, and I have a first entry short, pull back, second entry short. All right, there's a first leg up, first entry short, second leg up, second entry short in what is a strong bearish downtrend. So this is a high probability setup. Great bearish bar, quick easy scalp before market reverse. New low form, first entry short, strong push below EMA indicating bearish momentum. Second entry short, lower high, great reversal bar. Trend line keeps holding. Once again, quick easy scalp. It's pretty simple routine. You just wait for a 2-legged pullback to form at the key entry point below EMA, and you're just sticking with the buys. There's pretty much nothing else for you to complicate. If you are aware of price action rules, you know what the high probability setup is, you know how to find a key entry point, you know how to wait for EMA to confirm the momentum, and you're just sitting patiently and you wait all these aggressive entries out until eventually market comes back and pulls back. And you guys can see these high probability setups are working for a scalp with high win rate. And we got the break of the channel and eventually market closed. But of course, I would still be expecting strong push below EMA and to create new extreme. I hope the video was helpful, educational. I'm gonna see you guys in the next one. Take care, everybody.